So thanks everyone for staying on for this next portion of the day today. We'll try and optimize the ability to view my slides here. There we are. Okay. So I've been kindly asked to spend the next hour talking about some of my experiences with respect to medical technology entrepreneurship. I've been doing medical device innovation for 20 plus years now. Had some experiences locally here in Toronto, many in the Bay Area, some around the world. So looking forward to sharing some of those with you. As we go forward, I'd like to just encourage people to not be shy. I hope that we can make this a little bit didactic, even though when there are 85 other people in the audience, it might be a little bit intimidating to step up and ask a question, but please feel free to do so as we go on, because I think if there are points, that I bring out that draw a question or warrant further elaboration or commenting or even rebuttal of, I'm very open to that, and would love to hear from people and get to know people in the audience as well, especially given that we are relegated to this format of doing things not in person, and we normally would have a great opportunity to chat before and after, and those last 15 minutes probably would have been very loud chatter in the auditorium, as opposed to a quiet opportunity to catch a quick break before starting up again. So let's try and make up for some of that with some interaction as we go forward. And I'm glad to have been invited to provide this summary of my experiences and thoughts and observations of trends going forward. It's really targeted around people who have an interest in entrepreneurship or medical technology innovation. It's got a bit of a skew towards the Canadian medical system, parallel to some of the thoughts, but hopefully more expansive than some of the things I was alluding to in the prior session. So we'll get started with that. Just as a disclosure of my financial interests, I did start up a company. I'm active in the space. This company is one of the larger medical device companies in Canada as far as headcount goes. So I do have some financial interests and intellectual property and so on related to Canadian Medical. But hopefully that relationship and experience brings more to the conversation than it detracts from it or skews it. So just to talk a little bit about myself, I grew up in Mississauga. I knew I wanted to build things, and I had an entrepreneurial bent growing up. And Waterloo was a great environment for me to go to. I went to computer engineering because I wanted to design new things. I knew I didn't have a lot of capital to get them started with. Software seemed like a great way to move forward and come up with some new innovations in a capital efficient manner. So I threw myself into computer engineering and had a great experience. Got to do some jobs I really liked as a co-op student, some I did not like so much. And when I graduated, I got to build an EEG system, which measures brainwave activity. And it was the first system to actually synchronize a video recording with the measurement of these electrical signals from the brain that are used to diagnose things like seizure disorders, brain death, unfortunately, sleep apnea, and you would decide whether or not you ought to use drugs, change the drugs, confirm a diagnosis, potentially do some surgical interventions, and in current day, they would actually be deciding on some functional neuromodulation based on EEG data as well. So that was exciting for me, but I was really working as an engineer who could design software and test circuits and integrate a system together. I wasn't as familiar with the applied side of it. Why was I doing this? How did the doctors interpret the signals that were coming off? How are they making their decisions? What did they need as the next innovation? So I felt like I wanted to learn more. I went to Stanford and I did a master's in electrical engineering with some physicians supervising me there. Stanford, the Bay Area in general, is one of the epicenters in the world for medical technology innovation, and certainly was more concentrated 20 years ago than it is now. I think you're seeing actually a greater dissemination or distribution of that expertise outside of the conventional areas like Boston and Minnesota and the Bay Area. and you're seeing that more broadly around the world than you used to. But it was a great place for me to be. I worked with some physicians, started up a few medical device companies while I was doing my master's degree, stayed there for a medical degree, because I saw how these physicians with an entrepreneurial background and an engineering or technical background could really come up with new ideas and move them forward and translate them and impact patient care. And my engineering research was done inside a hospital. And if you're used to working with, at the time, 20 guys, unfortunately, now it's, would be closer to a 40-60 mix of genders, but at the time it was certainly 20 guys in a room designing circuits and seeing the same people over and over again. And then going into a hospital where you see people being born on one floor and dying on another, and all of the emotions of the hospital system, this big building full of problems that needed to be solved. It was a great place for me to go and dive into the area of being a clinician, and also being someone who wanted to advance the state of healthcare, as many others do in the technical world and the medical world. Then I came back to Canada. My father, who I believe is in the audience, I used to make fun of him because he did 11 years of post-secondary education. I used to make fun of him for that. It's too much time in school. Well, lo and behold, 17 years after finishing high school, I finally finished my training as an interventional cardiology fellow, and then started practicing in 2013 here at Sunnybrook. During my residency, I started doing research with the group you can see at the bottom of this, the big building at the main campus for Sunnybrook. The building off to the far right is the area where a lot of imaging research happens. And in fact, the top 2 floors are also where a lot of imaging research and image-guided care happens. So Sunnybrook is an international center for developing new technologies, especially in the area of image-guided therapy. And my current startup company, which I'll talk a bit further, is Canavi Medical. And it was prototyped in a room right behind that window there. And a lot of the development happens in the region of this building in the western corner of the main building. So, things that motivate me and why I got into medical technology innovation is I'm not a great person when I'm bored. So if I'm busy, I have problems to solve. If I'm productive, I'm a much happier person. And with the number of problems in the healthcare system, there's no shortage of problems to solve, and I've not been bored since the age of 25. I think the ability to advance healthcare, both locally for my own patients and for the patients in my own hospital, as well as globally, is important to me. I really like looking after patients as a clinician, but I also want some of the things that I develop have more broader impact, and that's where the innovation comes into play. Certainly developing new medical devices, new medical technologies is full of intellectual challenge, problem solving, and there's also an element of competition once you start getting into this kind of venture. Team building is a big part of it. I've always really enjoyed doing this. I think there are very few people that can go out and do this on their own and do it well. I think you need a good team with complementary skills and a compatible culture to be successful. And that's one of the things that motivates me and often gets us through hard times, because there are many hard times when you get into the area of medical technology entrepreneurship. It's not an easy road. There is some economic incentive, certainly, both personally in terms of, if you are successful, you should get rewarded for high risk endeavors. But also in terms of building the local economy for Canada. We import a lot of our medical devices, and if we want to be able to provide contemporary care to patients or receive contemporary care as patients, we can't always be looking to buy that from other places. We have to be able to build some of this on our own and trade with other businesses around the world if we're going to be good at that, unless we really go to the resource economy and rely on that to be the way that we are going to fund our healthcare system in perpetuity going forward, which is not anywhere near as high margin as a lot of the medical technologies that we increasingly rely upon and that others in the world increasingly rely upon as well. When I started getting into medical technology innovation, I really enjoyed the international aspect of doing research. Very early on as a medical student, I started doing research with people in Japan. I built a prototype of an imaging system and then started being used on patients in Japan when I was at the age of 26. and developed relationships with people in Europe, China, and the United States extensively since then. And so I think that that's all very exciting. And contributing to the refinement of the Canadian medtech innovation ecosystem. When I moved back to Canada from Stanford in 2004 to do medicine and subsequently to practice cardiology and now interventional cardiology, where you treat patients with heart attacks, there was not a lot in the Canadian environment in 2004. There was a company in Vancouver called QLT Therapeutics treating people with age-related macular degeneration. Their drug-eluting stent was invented in Canada, and that was developed again out of the Vancouver area. And there were a few small successes in the Toronto area. One company being in the area of radiology called Merge that my father was involved with. But I wanted to be able to help at least be a player in terms of advancing Canadian medtech so that we were more innovative, so that we were greater participants at the international scale. Some questions popping up in terms of area of medicine I practice. It's interventional cardiology. We have a 22 physician team of cardiologists here at Sunnybrook, and we are a tertiary care center. And do a lot of minimally invasive procedures. We're one of the largest structural heart programs in the world here. Engineering was really helpful for me when I went through medical training. It was interesting. When I started medical school in 2004, being an engineer going into medical school was a bit of an unusual background. A lot of people from life sciences, neurosciences, kinesiology, going into medicine, but not as many engineers. And a lot of the learning in medicine is very different than it is in engineering. A lot of engineering learning is first principles. How do you build something? How do you break something? How do you make sure it's failure proof? And understanding the mechanics of it. The human body and how it interacts with drugs and devices is very different. It's hard to reduce it to first principles. It's hard to say, hey, the basics of F equals MA are going to apply to how a body part responds to a drug. So a lot of what you do in medicine will be pattern recognition and research in large scale situations and following guidelines. So I had to go from being able to figure things out from a first principles basis to absorbing large amounts of information and memorizing it and following patterns. But the thought process of being an engineer amongst a group of people that were more used to typical backgrounds for medicine was interesting because I'd come up with different questions. I'd be very challenged to try and keep up with their ability to absorb lots of information quickly and assimilate that information. But I think I was able to contribute a bit in terms of perhaps more either creative aspects or mechanistic aspects of how various treatments might potentially take place or what pathological processes were taking place. So hopefully that's answering some of the questions that come up and supporting the interactive nature of what we're trying to promote in this discussion today. For context, the first technology that I developed once I was independent, so not working for a company, was to treat heart attacks. This is what a heart attack looks like at 2 a.m, where there's a blocked artery and there's no blood flow going through that artery. And the patient would have chest pain. Their heart might stop beating, or it might beat really quickly and put them in a cardiac arrest. And if you don't treat it quickly, then that heart muscle dies and you end up having a weak heart muscle that requires pills and other treatments to avoid having heart failure and repeat admissions going forward. And if you look at an artery, when there's a clot in it, you want to take the clot out, or you want to push the clot off to the side and put a stent in to get the blood flow through that artery as quickly as possible. And so we built a device that actually went in and aspirated the clot out. We simultaneously rinsed the blockage, and then we aspirated the clot out and restored blood flow. And this device got used in about 1,000 patients around the world, Germany, Australia, United States. In fact, one of the lead investigators with it was based out of Vancouver, Canada. It was interesting technology to develop. I learned a lot about how to build a new technology, build a team, interact with clinicians, and refine the technology. Now, this is not currently available. A little bit of a frustrating point because I occasionally could use this when I'm looking after sick patients in the morning. It got acquired by a company that then got acquired by another company that then got acquired by yet another company and ultimately became part of Medtronic and then subsequently was forgotten about. It was a good learning experience for me. I think everyone who was involved in that project has gone and had very successful careers in medical technology innovation. And this is an example of what the heart attack looked like before it was treated. And then to show you what it would look like afterwards is in this video, where you can all of a sudden see the full artery coming down and being reperfused and a much larger part of the heart muscle getting fed. And then this last little bit where there's a narrowing, a residual narrowing, that would have been treated with angioplasty and stenting. I've done a few other startups that I've been involved with, but the current one out of Sunnybrook that my disclosures relate to is called Conavi Medical. This is what an angiogram looks like, and this is the conventional standard of care for treating coronary artery disease. Is you take pictures, you identify some blockages, and then you open up those blockages to get the blood flow to the heart muscle and to alleviate the patient's chest pain and heart failure and other symptoms. This is the most common cause of death in the world. 50 million people die every year in the world, and 17 of them die of cardiovascular disease. And of that 17 million, 8 million die of coronary artery disease. And the most common procedure done in the world is angioplasty and stenting, where you put in balloons and stents to open up arteries so that they get more oxygen to the heart muscle. Now, this is the definitive way of actually taking pictures, the standard of care way of taking pictures is using x-rays, where you have the patient lie on a table, the x-ray pictures are taken, and you inject this contrast so that you can see the vessels under the x-ray system, and then put your stents and balloons in place in real time under that guidance. But there are some shortcomings to that because you don't truly have a way of directly measuring the size of the vessel. There are some things you don't see on the x-rays. And there were two technologies out there that still are out there that use either an ultrasound device or an optical imaging device to look at the plaque. And what Conavi does is we actually make both of those. So of the 4 million angioplasties around the world, 600,000 of them use an imaging catheter, where it will either use optical imaging or ultrasound imaging to take the pictures. We're the first company to do both. And there are advantages to that because ultrasound can see through blood, optical imaging can see in greater resolution and greater detail and better contrast. It sees the stents really nicely. So at certain times in a procedure, ultrasound might be more useful, and at other points, optical might be more useful. And often there's synergistic or complementary information between the two images that when you collect these, and it only takes 30 seconds to a minute to collect the images, but it provides information that reduces bad events in the next 5 years by 50%. So for those of you that were on the last call, I asked Shahira, if you had a technology that costs maybe 10% more than what you currently do, and it made people live 5 years longer, would it be adopted? This is a technology that either ultrasound imaging or optical imaging, not ours in particular yet, although we're going to work on that data. But if you have just half of our system working, it looks like it cuts down on bad events by 50%. Costs an extra $1,000 plus 15 minutes in the cath lab. Doctors need to be trained more to do that, but it substantially reduces bad events in patients with coronary artery disease. So that's what we're working on now. And here's an example of a fibrous plaque from an autopsy. This is what it looks like on ultrasound. This is what it looks like in an optical imaging catheter. This is a lipid-rich plaque. This is the kind of plaque that causes heart attacks. And you can see the full thickness of it with ultrasound, so you can size the stent properly when it goes in or choose the right size balloons. The optical imaging doesn't see through that lipid-rich plaque, but at least it lets you know there's a lipid-rich plaque there, the size of which can be determined by the ultrasound picture. And we did the very first human studies of this here at Hamilton. Hamilton Health Sciences Center was the first center to use this. These are what the pictures look like in the cath lab, and they complement the angiographic pictures quite well. So this company has almost 100 people that work for it. It's by head count, as I said, one of the largest medical device companies in Canada. Most medical device companies in Canada are subsidiaries of multinational companies. There are a few that actually make the technology here in Canada. Profound also is one of the largest companies, as are a few others that I'll talk about later on. But we've used in about 250 patients. We've been used in Canada, the United States, and China. We have approvals in Canada, the US, and Japan, a fairly large patent portfolio. I alluded to some of the recent data set that has come out saying if you use imaging and are more precise with determining where to put a stent and if you've put the stent in well or not, that it reduces bad events. That's been a huge tide that has lifted all boats in our area. And that is something that I think is going to help the company really grow substantially. We recently had a publicly announced $20 million funding, of which half of has closed and the other half is committed to. And we're going to be scaling up our operations, growing revenues, and getting more clinical experience with this to try and be a large company. A few questions that are popping up. One of them is, where did we build the team for these projects? And I've got a little bit that I'm going to talk about at team building later on in terms of identifying what might be a good team to start with going forward and what skill sets you want there and how that might evolve over time. There's a lot happening in Canada with respect to artificial intelligence and image-guided therapy. Sunnybrook has a $49 million strategic innovation fund program called Innovate. So I'd suggest taking a look at innovate.ca. If it's not what led you to this talk, it's something to be aware of because it has a lecture series that's parallel to the Medventions series for the particular area of artificial intelligence and medical imaging. The question came up, have we considered optimizing the clot rinsing system for the cerebrovascular system? And absolutely. In fact, one of the stories of that first company for clot removal, we actually started off trying to enable carotid stenting. And the problem was if you put a stent in the carotid artery and a clot goes up to the brain, it causes a stroke. So our initial device was actually very different from the one I showed in the animation, where we stagnated blood flow in the carotid arteries before rinsing the vessel and before the stent was deployed. And then as soon as the clot and the plaque was treated and the stent was in place, we would deflate a balloon and allow blood flow to be restored to the brain. And if you do that quickly enough, the brain benefits by avoiding an embolic event while getting reperfused effectively. So thanks for the questions, and love to continue to respond to them as they come in. I'm just going to talk broadly, and I've said this in a few years. Most of my slides are new, but I think some of them are worth recycling. Canada, in context, we are a net importer of medical devices. We import $8 billion worth of devices and export $3 billion, and there are many small companies around the world that export or do much better per capita than we do in terms of sending technologies outwards and building their economy. The US is obviously the main place where most medical innovations are built and commercialized from, and it's a big sector in the US. It represents a third of the world in terms of manufacturing capacity for medical technology innovations, and it's also one of the largest markets. It's a big market. It's about at least $250 million, if not more, and it's just going to grow. You look at how the Canadian age demographic distribution is going to evolve over the course of the next 20, 30 years. The number of people over the age of 65 is expected to double in the next 10 years. And that's where the majority of healthcare, hospital-based healthcare, is delivered. So Canada needs to be involved in this if it's going to have a sustainable tax base and a sustainable system for looking after people as we happily grow older together over the coming decades. I think, broadly speaking, people recognize that healthcare is important. We spoke about aging demographics. People are increasingly, there's less poverty in most jurisdictions around the world, and that's increasing the market for healthcare. And people are no longer constrained to just paying for the basics of life in large portions. This is evidence in China very directly, where 10 years ago, there were 100,000 people getting angioplasties done in China, and now it's well over 1 million. So for your markets to grow by a size of 1,000% over the course of a decade is very reflective of urbanization and modernization and increasing ability to pay. Similar trends happening in India and elsewhere, as well as higher expectations in established markets in terms of quality of care in places like North America and Europe. It's an increasingly data-driven area. And it uses a broad range of skills. You need to have engineers contribute. You need people who understand biology and physiology to contribute, people who understand governance and quality management and manufacturing to contribute. It's a really diverse industry. If you wanted to build an app, for example, if you wanted to build the next payment app platform, you need a finance person and you need a software team and a marketing team. And you can have 20 or 30 or 40 of people with the same skill set within your organization, and there's a bit more liquidity in that workforce. When you're building a new medical device, each person is a more crucial link in the chain to success. And so I think that that's exciting for people who are involved in the development of medical technology, that they all have important contributions to make and their skills become highly valued very quickly. It's also one of the challenges is that if you lose a key person going forward, that it can have a big impact if they are all of a sudden become like the link that you needed desperately to move you forward to your next commercialization milestone. It is a highly regulated sector. And I think that if the regulations are not adaptable to or adapting to the pace of change that's happening in terms of the technology platforms or the research that's coming out or patient expectations, that it can seem very, very slow to grow, slow to adopt, and very difficult to bring investment into as a result of that big lag between when an innovation occurs and when it actually gets commercialized. It's a very intellectual property centric sector. And if you don't have patents in the space, then you can get walked over pretty easily by groups that do have the patents. This is much more so than, say, the consumer electronics space, where there are many people who are infringing on each other all the time, and they will create or find ways to license the technology or band together. And certainly there are counterexamples to that, but on the whole, I would say that the proprietary nature of intellectual property is very closely guarded in the medical technology space, and the patents are incredibly important, as they are in the pharma world as well. There are big cost pressures in the medical healthcare system, especially in the single payer system that we have here in Canada, especially when the care in particular is being funneled through a hospital where your only customer is provincially funded healthcare. Certainly, once you get into consumer healthcare or things where there are opportunities to pay for things outside of the healthcare system, pay out of pocket or pay through private insurance, it's a little bit easier. And there's been a lot of consolidation in the medical device sector where large companies have been swallowing each other and creating fairly large monopolies of expertise and monopolies of distribution chains. And so certainly important things to consider. I'm just going to scan through the questions here and see if there are one or two that I can answer fairly quickly. In terms of the CTA and FFR risk assessment for plaque and stenosis, it's a pretty cardiology specific question, but certainly I think CT coronary angiograms are becoming more prevalent, and you can't use them during a procedure to guide an angioplasty and stenting, but they are very helpful in terms of screening who should show up for an angioplasty and stenting to begin with. A question about market growth: does it suggest poor health choices? Certainly, people talk about diabetes and weight, lifestyle changes, sedentary nature as being things that maybe cause growth in the market, but people are going to, first of all, I would say tobacco is way down, and tobacco use is way down. Physical fitness is generally up, and lifestyle changes, if you were to look at them grossly, cardiovascular disease has dropped by 50% in the past 50 years in terms of its onset or prevalence on a per capita basis. And half of that's attributable to lifestyle interventions and people being less poor, and half of that's attributable to technology improvements, whether it be drugs or devices, et cetera. So I think it is a factor in terms of growth, but I think it's really just because as you survive one disease, whether it's prostate cancer, a fall, a stroke, or a heart attack, you survive to the next one. And it's pretty common for us now in the hospitals to look after people with a list of comorbidities that are maybe 5 or 10 conditions long and have to navigate how to treat people with those. That's in some respects a bit of being a victim of success, or the patients being a beneficiary of success, that they've lived through these conditions, been able to continue to do things that they enjoy doing for a longer period of time. And I would call that more success than failure going forward. And I'm just going to go through here. I think some of the other questions I'll defer for now to get through the next slide. Where Canada's at, we do great research. We have high volume centers and physicians that know how to treat patients well. There's a lot of engineering talent in Canada. We are next to the world's largest market, which is the United States. We are, in one of the more difficult markets, as we spoke about earlier, to sell an innovation into. And so that's a definite challenging. Although when you look at it, that shouldn't be the case. The Ontario healthcare system is the largest buyer of medical devices in the world. We buy more than the largest hospital system in the United States does. And we should use that to our advantage. And unfortunately, not enough of our budget for healthcare is targeted towards adopting innovation to move some of the great research that we have and the early technologies that we build in Canada into the market through our own healthcare system. So we often go to other healthcare systems to move things forward. And I'll talk about some of these other challenges a bit later on. But here's, Health Canada spends $4 billion a year regulating medical devices and providing care to Indigenous communities. Ascension Health has revenues of $40 billion a year. That's the largest hospital system in the US. And Hospital Corporation of America is also one of the largest for-profit systems in the US. Ontario, I think it's up to $56 billion per year that we spend on healthcare now, right? It's a big system that we have here in Ontario relative to other spots in the world, and we should use that to our advantage. Whenever we talk about med technology, entrepreneurship, it's not an easy area to get into. There are a lot of ups and downs. There are challenges. It's complicated. Little things can really dissuade people going forward. The people that have been on the teams that I've been on have had a lot of perseverance. We have a lot of bruises on our foreheads as we try to run through brick walls of challenges, and I'll talk about a few of those. But if you're motivated for the right reasons to have a positive impact, to improve quality of life, survival, if it's motivated by personal experiences, I lost a friend of mine at a young age, and the reason why he did not survive was because there was inadequate care available locally where he had a trauma incident. So, those are things that kind of incentivize people. Certainly there are financial considerations. We all have to make ends meet and be rewarded for risk that we take on. And the other motivations for medical entrepreneurs often is research interests, part of their identity formation as well. It's a fun thing to talk about in terms of what you do. I think people enjoy talking about working in this area going forward with people in their social networks. One of the questions that came up earlier were related to team formation. And I think the pattern that I've most frequently seen as being successful is a little bit like the Apple model, where you have kind of a visionary and then you have a technical Wozniak type person adjacent to them. Because you have to have someone who can have a vision and who can sell. And certainly they don't exclusively have the vision and they don't exclusively sell, but they take the leadership role or responsibility of that to be able to provide a narrative to the investors and to the customers and to the hires and to the regulators, and to kind of coalesce a team. And then you need the technical expertise. And it's hard to put both of those into the same person. It's just too much to throw into one person. So I think an important part of being successful in the medical technology space is to have a team. To have this combination of visionary, and I said lead, but could be leads in parenthesis, could be more than one person, and a technical lead, founder, more than one person. But you want someone who really understands the market, who can speak to the challenges, that truly understands the subtleties and the language of healthcare, understands the workflows that you'll be working in, understands the systems that you will be working in quite well as someone who can actually make it happen. If you don't have those, then it's really hard to move forward. I think mentors are incredibly important. Getting people who can provide advice, who've kind of been there and done it, so you don't have to relearn things for the first time. Certainly, we've benefited from a number of mentors here with Canavi in Canada, and I had excellent mentors when I was in the Bay Area starting things off. It was a really privileged experience. There wasn't as much of that mentorship available when I first came back to Canada, but it's increasingly growing. There are people repatriating with decades of experience in medtech finance and commercialization and sales and strategy development that are now coming back to Canada or that are still in the US that want to contribute to organizations, innovations, wherever they are. They're basically geographic agnostic. So building that mentorship base early on is important. Bringing some professionals on board to manage intellectual property and company formation and financing, all critical. Clinical advisors will be critical to making sure that your technology or solution is on target, is actionable, makes sense, a group that can answer questions when you run into things that you don't understand. Clinical advisors really enjoy doing this kind of stuff. Some of them are frustrated and they want the problems that they face in front of their patients. They want them to be solved and they want research opportunities. So if you come up with an early sort of one paragraph sales pitch and a quick animation or a quick diagram or two, or even a prototype, and you show up through a network and get an introduction to somebody who will spend the first 5 minutes with you, you'll get a quick sense of what their interest is. You have to be a little bit careful because many clinical advisors involved in innovation are directly in contact with the big companies that you might want to make sure don't know about your technology until it's protected and developed. So, use caution in that. You can never untell an idea. You have to be able to protect the proprietary nature of your secret sauce. But there are many ways to start a conversation without divulging the secret sauce and measure interest and then develop a relationship that's very helpful going forward. And incredibly important is building a culture so that you can have a motivated and engaged team that has complementary skills that buy into and complete the vision. Set the vision and then hire people that want to join you and are willing to go through some of the ups and the downs with you. I think that is a very important part of growing and sustaining an enterprise, and the team will fluctuate over the course of time. I used to be the CEO of Canavi Medical. I still want to be a doctor. I can't manage 100 employees and raise funding and manage many of the logistical things that happen and the crises that come up from day to day. And so our team has evolved by hiring and bringing in new senior management to reflect the status of where the company is at. A few questions are popping up here, so I'm just going to turn back to that. A few things around trying to maybe make Ontario or Canada a little bit like what Israel in some respects has done, where if you have the innovation happen. The Israeli model is an interesting one. They develop the new technology and the IP and the prototyping in Israel, but then they quickly find a home base in the United States to do their sales, their marketing, their finance, their commercialization, recognizing that the US is an important market. And that's something I'm actually going to come back to a little bit later as a strategy that I think is very much worthwhile to use. There's a question as to whether you can use Canadian trial data to support US approval. Absolutely. You can take Canadian data and use that to support regulatory applications in almost any jurisdiction other than China. China will always want data from the Chinese population. But most other jurisdictions, you can take clinical data from North America. You really want a credible source of information. If you have reputable centers that follow the proper standards of good clinical trial practices and good laboratory practices for generating your regulatory submission file, then you can use that pretty much anywhere in the world. When do you add GTM skills? Maybe if you can, Samir, elaborate on GTM just so that I can answer that question appropriately. In terms of how would I attribute the lack of Canadian research commercialization compared to U.S. educational institutions to misallocation? I think there's a few reasons for that I'll come to. I think we have a very it's popular to, as a government, invest in research and development, so you're moving things forward. It's a little bit less popular to use government money to finance the commercialization steps. Although the largest investor in Canada, ironically, is BDC, the Business Development Canada, which in fact is government money supporting commercialization. I think the big thing is just the gap of expertise in investing in medtech ventures, and I think that is the one that needs to be addressed. I'll come back to this a little bit more. Go to market, yeah. So in terms of when do you add go to market skills, hopefully that visionary lead has that to start with. Hopefully your initial person can be the salesperson that helps you build a marketing plan and has some expertise. But I think having someone who can help you with marketing from a reimbursement perspective, from a data generating perspective, from a social media and dissemination perspective. One of the things that really helps your financing is when you have really nice polished presentations. And if you have someone who's good at telling a story and doing that in an aesthetically pleasing and organized way, that makes sense to not just a sophisticated entrepreneur who might be almost too deep in it to explain the story to an investment audience. I think bringing that kind of talent in as early as you can afford it is great. There's a little bit of a metric where if you look at how many people at a startup organization are involved in sales and marketing versus how many are involved in actually developing the technology, many of the most successful organizations are the ones that have a ratio that's much more favorable towards sales and marketing people than the actual manufacturing and research and development personnel. But I think that there's a downside to that. Maybe you're not taking on tough enough of a challenge if you don't need that much talent from a technical perspective to bring forward. So I'll talk a bit more about that further. And are we a big enough market to keep building innovation, supporting them locally? We don't have to be big enough to support them in perpetuity, but we need to be big enough or have enough access to get the seed planted so that when a distributor in Japan or a potential strategic partner in the United States or Europe says, hey, we want to sell your technology, how does it work on your home base? And you have a story that you can tell them that, hey, this is why it's impacting care in Canada. And we don't have to, cross the border to do a clinical demonstration, and we can do it in our own home turf. That's very helpful. Just a few responses to some of the questions that are popping up there. In terms of idea generation, this is what Medventions Fellowship is all, or at least the starting point of Medventions Fellowships is all about, is coming up with your new idea. But the idea is to come up with identifying a series of needs within the healthcare system through an observation process, identifying those that are most attractive, and not going with your first idea that you're excited about because you want to be an entrepreneur, but actually systematically thinking about a series of ideas that you're going to compete off of each other to select the best idea amongst them that makes sense in terms of a problem that is meaningful to you, a problem where there's freedom to operate, where there are not other patents that will block you from being able to take on that venture, where you'll be able to create some early mover advantage. And one of the people that gave me the best advice in terms of how to select an idea that could be worth pursuing was the person who founded Boston Scientific, John Abele. He actually has a place just north of Toronto that he does conferences at, and he used to come up here quite a bit. So I had the pleasure of meeting with him on quite a few occasions. But his basic recipe was, is it an important need that will improve patient care? Is it something that you can protect? Is it something that you can actually build? Because building a technology is very, very difficult, especially in a situation where you might have a margin for it. And is it something people are willing to pay for? If the system's not ready to pay for it, even if it does help people, it won't be something that has the ability to sustain itself going forward. So that inspired basically the first 4 points here. And when it comes to novelty, hyper novel is not always better. You know, you talk a bit about visionaries like Vinod Khosla, who started Sun Microsystems, or Elon Musk, who started Tesla, and others who basically have these moonshot ideas where they're like, hey, we're going to do this big, crazy thing, and there is no limit to the size of our ambition. You know, it needs a little bit of a reality check, given the limited capacity to support those sorts of ventures locally, at least at present. Hopefully that moonshot ideas become more successful in the future. But, you know, I've got a technology that is for treating the most common cause of death in the world. It's been really, really hard to raise money for it and to grow it at the pace that we wanted to. So you want something that is new enough to get attention and to be differentiated, and to Shahira's point earlier on, is like a big idea and not a small incremental idea. Although there is something to be said for something that is not so novel that investors won't understand it, or they won't be able to say, well, you know, they currently pay for this one treatment and now they're going to shift over to, like, if there's no existing reimbursement, and if there's no existing clinical workflow, and if there's no skill set to receive a technology, those barriers can actually surmount the benefit of being a hyper novel and eventually hyper successful technology, but it just might take too long to get there. So things that you have to think about in terms of how big of a novelty bite are you going to take when you go into this space with a new idea. There's advantages to doing incremental, I would argue, and there's advantages to being visionary and ambitious. And you know, there are different ways that you might want to think about that. I've got some examples I'm going to talk about later on to kind of move that whole discussion forward a little bit more as we get on here. Just some early thoughts around patenting. I think patenting and intellectual property in general, such as copyrights and know-how and design patents, not just utility patents, are all important. And so if you're going to be in the space, and if you look at how hyper protective companies are in protecting their turf, and how much money has to be invested and time has to be invested into moving a new technology through conceptualization, design, clinical testing, redoing it all over again when you realize there's something that has to be solved for in a subsequent iteration, getting through regulatory approval, building up a manufacturing plan of some sort, getting it to market. You really, if you don't have IP, or if you don't have some other way of creating a sustained competitive advantage, then you're in trouble. And so having, I think, mastery of or at least access to mastery of intellectual property management is important. And I would go out and I would start being your own expert in your area and search the websites for patents in the US and in Europe and in Canada, do literature searches to see what else people have done that maybe they disclosed publicly, but they never actually filed a patent on, because that will impact your patentability. It might also potentially create freedom to operate if someone puts something out there in the public forum and then someone else patented it after the fact. You can nullify someone's patent by finding evidence that that idea was actually pre-existing. It just wasn't discovered by the patent examiner at the time that the patent was issued for your competitor. Work with trusted experts under non-disclosure agreements. If you tell people your secret sauce without a non-disclosure agreement, then it's no longer secret sauce, it's no longer patentable. And I've had that happen a few times where ideas got swiped by being a little bit too trusting too early. So I would suggest just a little bit of paranoia there. Healthy paranoia is a good thing. And you can learn about the patents in your area that are relevant by looking at the advertisements and instructions for use and marketing literature for competitive product lines, because they're required in the US to disclose what patents they are protected under, so that people can say, all right, I'm going to build something similar to this or not, based on the patents that exist around that technology that's already being commercialized by another company. So when you think about patenting, there are two aspects. You want to think about the rights to tell other people not to do something. In other words, the right to get a patent with claims. Effectively, if you have something that's novel, inventive, and useful, then and non-obvious, then you can get a patent and tell somebody else you cannot do this, right? You'll be without your permission. So it's a negative right. But what actually kills many companies and creates a lot of fear in startups is when they find a patent that is on target with something they're developing, and some other company that you may not have heard of. It could be a big player, but it could be a small company you never heard of before. And maybe the patent was filed as a provisional or not been published yet at the time that you started your venture, and hasn't come to the public realm yet. That can impede your freedom to operate if their disclosure date or priority date predates whenever you filed something with the patent office. So just two concepts to think about for people that are a bit new to this. Certainly people who have a lot of experience in the medical technology innovation sector are familiar with these concepts, but two very important concepts for people newer to the space to be very much aware of early on, and involve either patent agents or patent lawyers. In Canada, they're both very good. What you want to do when you start thinking about your intellectual property portfolio for a new venture is to fail early. You don't want to invest tens of millions of dollars and tens of thousands of hours into something only to find out in year 3 or 4 that you spent $10 million of other people's money and your past 4 years on something that you either can't commercialize, or if you did commercialize, you'd have to basically pay huge licensing fees to someone else to move forward with. So this is an area where you want to fail early and become an expert on. And it's an area of inherent risk that you just have to accept moving forward. And as you build that intellectual property portfolio, then you end up having something that adds some sustainability and competitive advantage going forward, which is incredibly key. So you have to think about patents right from the get-go. To answer Young Guo's question, I think that's really big. There's a question from Samir. If you're working on a medtech solution and that another startup is filed for regulatory approval, does that stop you from moving forward? No. Regulatory approval is not exclusivity. It's just permission to sell something, but it doesn't give the company that gets regulatory approval exclusivity for that market. You can also file for regulatory approval for a technology it's more the patent rights that create the exclusivity. It's not so much the regulatory approval. So if you get regulatory approval for your technology and you can bring it to market, even if someone else has regulatory approval for it, that's fine. That's competition. That's coexisting. And in fact, that can be helpful because your competitor might actually help you create the markets. They might help create the data, and they might actually help train the user base of physicians and get the reimbursement codes out there. So, having someone else at the party that's excited about the same thing as you is not a bad thing. But you want to make sure that whatever your particular unique advantages or unique features are that you have over your competition that allow you to even be at that party, you want them to be defensible from a legal perspective. So just wanted to bring those things forward. One question from Melanie: when do you quit or abandon an idea versus reiterating or pivoting? You always have to make that decision in real time. And you make the decisions that you make based on the information that you have at hand. And then if something comes in that clearly kills the whole value proposition in the sense that a competitive solution for your problem comes out that you will just never be able to best, then if you don't have another area that you can pivot to that's of significance, then it's probably worth having a good hard discussion with the people involved at that point and seeing what you can do with the assets of that company. Similarly, if a patent held by a competitor blocks what you're doing, then you have to have a serious discussion at that point. But don't get too discouraged early on. The number of times where I've found a patent that was of concern or found a competitor that was of concern, and then I did a bit of research and found a way to either invalidate the patent or go lateral to the patent, which is completely legal and on board with a solution that still uses your core IP, even if it's not your initial design. It's being adaptive. And if you're an expert in your space, usually you can find a way to pivot or reiterate. And I think the bigger thing is really, how set are you on trying to be successful with what you're doing versus other opportunities that you have at your life at that point that you have to kind of weigh. But the number of times where my heart stopped out of concern for something coming up only to 24 hours later saying, hey, there's a way around this, or it's not as much of an issue, or they threw really promising data onto the table because everyone puts their best foot forward in the public realm. And then you hear a little bit about what the challenges are of a particular technology or solution are. Don't get too discouraged too quickly, is what I would say. Give it some serious thought. And that's where your mentor base becomes very helpful as well. Your advisors and your mentor are critical when you get to those key decision points. And do I operate all medtech startups under LLPs? I mean, certainly you want to have some limited liability, and depending on where you're incorporated, you choose the right structure, business structure, to limit liability and attract investments that I'd say refer to your corporate lawyers for answering that question as effectively as need be. There's advantages to various jurisdictions for how you incorporate. In terms of fundraising, one of my life lessons is it's a really small world. So try not to burn bridges too early. Certainly I burnt my share of bridges by voicing frustrations around how difficult it is to raise money in the medtech sector. And when you look at medtech compared to things like digital technologies, communication technologies, property technologies, Bitcoin or cryptocurrencies, all sorts of things compete for that investment dollar. Real estate in Toronto competes for that investment dollar quite heavily. So, it's not a favored sector for investment in Canada. In fact, I had one very prominent investor tell me that his least two favorite sectors to invest in are medtech and restaurants. And it is challenging, but I think that there's going to be an evolution there where, as we have more success, I think we can bring more capital into the sector, and I'll talk about that going forward. I think one of the areas where, if I reflect on my past 15 or 20 years of doing medical technology innovation, the one area where I wish I had to spend less time was fundraising. I wish I had more time spent to actually build a technology, do clinical demonstrations, do the research, build a marketing plan, build a manufacturing operations. Fundraising is fun and exciting initially, but when it's 50% of your job efforts, it becomes a bit challenging and frustrating. So hopefully some of the evolutions in the Canadian medtech sector will make that easier for people going forward. I'm almost certain that it will, to be honest. But I do think fundraising is one of the biggest remaining gaps in Canadian medtech, and the other one being domestic procurement, and I'll summarize that subsequently. Which is a little bit antithetical to what you read when you open up the Financial Post or the Wall Street Journal or the Globe and Mail or your favorite data kit website or whatever you have. You hear about all this money that's floating around for innovation and SPACs with millions of dollars or billions of dollars ready to invest in the latest and greatest thing. And the VC community is growing. And there's, one of the theme of a recent private equity conference was, what do we do with the $2 trillion that we have that we can't find a place to put to get the returns that we want? I mean, there's a lot of money out there, and certainly all of the economic policies that have happened over the COVID period have almost put more money into that realm, combined with low inflation rates, to put a whole bunch of money into the realm of investment. I think that the reason why medtech hasn't received its due share of those funds relates to the long cycles, relates to technical uncertainty, relates to the expertise required to be able to invest in the sector successfully. So there is a lot of competition, but when you look competition amongst sectors for the money that's out there to invest in high risk enterprises. But if you think the way that companies like CPP or OMERS or Teachers think, they think long term, and they think about what's going to happen in the next 10 years, and will we have demographics on side? Yes, we will. Will we have technologies that can actually add value and reduce healthcare costs that are new, that supplant the way we deliver healthcare currently? Absolutely. So I think there's going to be a trend towards more and more money moving into this space. It certainly is there when you look at $25 and $50 and $500 million check sizes, and it's there when you look at $100,000 and $1 million and even $5 million check sizes. It's in that $5 to $25 million check size where there's still a gap in the Canadian environment. And hopefully there'll be some good solutions and more partners ready to do those kind of moves going forward. One question that came up is how much of your own money do you put forward before you go for angel money, and when's the right time for angel money? Your own money is angel money. It is, if you're not investing at that time, relative to what your visible means are, because no one's going to expect a student who's got debt and is, working at a restaurant on the side, making $18 an hour to support their education and a startup company, and doing credit card debt to fund their operation. Not that I recommend it, but I've seen people do it, or may have participated in it myself in my youth. These are things where you have to be willing to at least put some of your own money or your family's money into to convince others to step forward. It always helps. It doesn't have to be huge amounts because people are realistic about what you can do at that stage, but showing conviction, I think, is really important. One question about, is it resource allocation versus is it more money? There are really capital efficient ways to build companies. I think some of the infrastructure that's available through hospitals and universities provides low capital access to some important ability to test and prototype and develop. But you still need money to get things started. It requires resources to do things in a real way. And to build a meaningful medical technology, if it's a software, you can maybe do that with a few $1,000,000 if you're lucky and strategic. If you're building a simple, class 2 medical device that's not too complicated, maybe you can do it for $10 or $20 million. If it has a plug that has to be plugged into a wall that needs electrical safety testing and is a sterile device and is used to diagnose life-sustaining type activities, you're in the 40, 50, $100 million range realistically. And there is money that's needed. It's not just about resource allocation, although certainly it's easy to waste a lot of money when you have a lot of money. So you always have to be capital efficient, but there's also a floor to what's needed to make a company get to a point where it's cash flow positive and sustainable, or at least has an exit in view, even if it's not cash flow positive and sustainable at that point. So we spoke a little bit about, all the SPACs and VCs that are growing out there, and, healthcare, medtech hopefully will grow. There's a lot of government money out there at the provincial level, at the federal level, and in foreign jurisdictions as well. So got to be creative. Certainly for Canavi, the federal government's been incredibly supportive at helping the company move forward. Provincial money was very helpful for us at the early stages of development. And as I said, BDC is the largest quote unquote venture, although it's actual government money for any sort of innovation across all sectors in Canada. There's increasing competition for talent. People talked about as we transition, hopefully the latter stages of the COVID pandemic, then it is, there are people that are doing the great shift of deciding what they want to do at this next stage of their life. There's a huge demand for engineering talent and for technical expertise and for marketing expertise. There's onshoring of manufacturing and operations, where things that we used to do elsewhere are starting to happen more and more locally. And this is a good thing. It means our salaries are going to go up, our opportunities are going to go up. But as a company that has to pay for these things, you just have to be ready to budget for that, to be able to retain and grow the talent base within your organization very aggressively, and be willing to go remotely when you need to for certain types of talent, recognizing that might be the best way to get the expertise that you need. Certainly, throughout the medtech sector, supply chain issues, like everything else, has been an issue of late. There's trade protectionism, where a lot of spats between different countries, and thankfully, medtech tends to be a little bit more immune to that than some of the resource-based things. But certainly worth being aware of, and certainly it does impact your access to markets. So having offices in a few different places or partners in a few different geographies can help you access those markets sooner rather than later. I think one of the big things that we're going to wake up from after COVID is this massive capacity crunch in conventional healthcare. This is the stress test, right? This is the stress test that says if something happens, can our healthcare system do what it needs to do to not just look after COVID, but look after orthopedic surgery, to manage cardiac care, to manage cancer care. My own personal estimation is that 2 or 3 times as many people have died or suffered during COVID than actually had COVID, that died of COVID, because of inability to access important care. And you've seen this in the news. And we need to find new ways to build capacity in our healthcare system without breaking the bank. And so innovations that help address that are going to become incredibly high in demand. And the backlog associated with COVID, never mind the capacity crunch issue. I've got some examples here just for thought that might be worth chatting about, that people might have some questions. But think of a few different things, like a device that might just be a way to tie a surgical knot in small spaces that you can get a patent on. Sutures are a big part of surgical therapy, whether it's laparoscopic therapy, open heart surgery. If you can come up with a nice way to tie a surgical knot, there's something that might not sound too technologically sophisticated, but might actually be very useful to advance, and might not have a huge regulatory burden, and might not be too complicated to manufacture in large quantities. Another device that gets rid of skin cosmetic lesions painlessly. When you start getting into things where it doesn't have to be done in a hospital, or where dermatologists can build a business out of it, or where patients can pay directly out of it because it's something that is not, say, government funded, but something that's from their own discretionary funding, that might be more attractive from a commercial and investment perspective than maybe a sophisticated life-saving technology that has a 10-year regulatory cycle and requires 1,000 patients worth of data to get its first approval for. It just might be more feasible, and it might provide you the expertise and the revenue base and the infrastructure to then do that life-saving technology with later on. It might be a way to actually fund some of the things you want to do as you build the infrastructure for a commercial organization going forward. The third one is a little bit of a borrow from a company called KA Imaging out of Waterloo. They build these imaging detectors, X-ray detectors that use 2 different wavelengths of X-rays simultaneously to see things that you can't see on a conventional X-ray. And my daughter, once I had to call 911 after doing the Heimlich maneuver for one of my daughters because she choked on a plastic toy, and she went blue, and she was not able to speak, and it was a very stressful moment. I did the Heimlich maneuver on her, called 911. She started breathing again. I didn't see the plastic toy come up. I didn't know where it was. This X-ray technology from KA Imaging could have been used at sick kids, and told me that the little turkey, my daughter, had swallowed the plastic toy because she didn't want to give it to me, and it was in her stomach, and it presented itself the next day after she had spent her time in the hospital and a prolonged hospital stay and a lot of anxiety. So, that's a useful technology that would have a nice market for pediatrics, and asphyxiation or choking is a big concern and a big burden on pediatric healthcare systems. And that technology at K Imaging, I think, is going to be very useful, and doesn't require a huge amount of clinical trial data to get it to go forward. How about this fourth one? A service that helps discharge patients earlier by giving them a kit saying, hey, you had a heart attack. We're going to send you home with a heart monitor and a blood pressure monitoring kit, and it's going to be teleconnected so that the doctors can watch you and see how you're doing and give you rehab advice remotely while you recover at home, instead of sitting in a hospital, taking up a bed, eating food that you don't like, sharing a room with people that maybe you don't want to be with, and costing the healthcare system money, and getting you back to the comforts of home while still giving you that safety and coaching and education that you need on your 4th and 5th day of a hospital discharge. Maybe those sorts of services would be really attractive to healthcare systems and patients. Some of them would even be willing to pay for it to get out of hospital sooner. And it wouldn't. And if it's being used with monitoring systems, there would certainly be a regulatory component to it, but something that would be really attractive from a commercial perspective, with perhaps a little bit less capital required for the moonshot idea. Patients who come in with trauma, we worry about how much blood to give them. You give them too much blood, they get side effects from the blood, or you waste blood. If you give them too little blood, then vital organs don't get perfused quickly enough, and it can have a significant impact on their outcome in that golden window while they're being resuscitated from their multi-organ trauma, from a motor vehicle accident or a gunshot wound or what have you. So, that might be an interesting thing to develop, but then you have to be there ready to support it during acute care at the wee hours of the night, and patients who are critically ill, and a lot of regulatory issues to go through and quality assurance issues to go through. And the final one is the moonshot idea. Imagine that you can make a robot that you basically CT scan somebody who, let's say, has a colon cancer that's metastasized. And you say, you know what? It's going to be an 8-hour surgery for physicians to do. There aren't enough surgeons around or enough operating rooms to do it. We're just going to tell the CT scan, we're going to do a CT scan, put that data into an algorithm, and let this robot autonomously remove all of the tumor that's seen, and send them out. That thing is like a crazy ambitious moonshot idea that disrupts how physicians do work, is technologically difficult to do, but would potentially be very attractive if it actually did exist. It'd be kind of like, you know, Tesla saying, hey, we're going to send cars out on the road that are powered by electricity, that drive autonomously, and that are really quiet and comfortable. You know, that's a moonshot idea, but man, you better find an environment that has the resources to sustain that, to make it happen. Because, you know, would you want that? Ideally, yes, you would. But then you could provide that good level of care to everybody. It's not just, oh, I got to find the surgeon that's really, really good at it. This is scalable, provided people can pay for it, but a very difficult thing to take on. So just a few examples in terms of what size of bite of incrementalism versus moonshot ideology do you want to take on? And you have to ask yourself, do you and your team and the environment and the reimbursement system and the technologies needed to make these things happen, do they exist, and how are you going to do that dance? Things that attract investment when you're in a medtech sector: can you get IP for it? How much capital does it require? Is it profitable? Is the regulatory burden low? Does the team have proven track records? Is it simple enough to sell in a 10-minute investor presentation as opposed to a 1-hour multifaceted presentation where you're solving 3 different problems with 3 different solutions? Is it a hot spot that has, let's call it sex appeal, like AI or digital health or robotics? Are there companies that exited recently with really good comparables in that sector where all the VCs are like, oh, we just saw that other company exit with the best valve technology ever, and all of a sudden they're willing to throw hundreds of millions of dollars into the next second follower because they know there were 3 other companies that want to buy a competitive technology to that first one that made the market move. All of these things are great in terms of attracting investment. They're not always aligned with what improves healthcare or motivates the entrepreneur, like finding a solution that solves a true clinical need, that makes people live longer, that makes them feel more comfortable. The more novel thing something is, maybe the more disincentivized the investor might be because there's more risk involved in it. The generation of clinical data is great, but it costs money to generate clinical data and time to sift through that clinical data. And that detracts in some respects from the investment. And so the reward for generating that clinical data needs to be substantial enough to attract bigger investment, and so on in terms of things that maybe have a bit of a balancing act between you know, what improves healthcare, what motivates the entrepreneur, and what attracts investment. We spoke a little bit about some of the competition for investment earlier. I don't think I'm going to go into this too much, but just put it out there for reference that there are some areas where people have made a lot of money that compete for the investment dollars. And so you have to have an investor that's interested and experienced in medtech to make things happen. And there are a lot of bottlenecks out there, like having the capital, having the talent, having the supply chain, managing intellectual property, responding to crises where a customer says, oh, this is a failure point, or oh, this is what I want, or why didn't this thing work during this particular case that I had? You know, that requires a lot of investment and attention that can be unanticipated, not accounted for when you put your initial financial model together, as can regulatory hurdles and long reimbursement processes. Some lessons in the dance of innovation. You know, if you're based in Canada, as early as you can, try and establish a market somewhere else or a presence somewhere else. In particular, the USA is an attractive one. It gives you access to sales and talent and financing. And that's probably one of the things I would have done sooner with Canavi if I had the chance. I think most investors want to see traction in the United States. They're less interested in traction in other markets and really look at the US as kind of their yardstick by which they measure the interest in investing. So having traction in the US market is incredibly important and generally has better margins and easier market entry compared to other markets. I'm always thankful that we have a strong intellectual property portfolio. Every time we run into a crisis, it's our intellectual property portfolio and our sustained competitive advantage that acts as one of the pillars or backbones that keeps us moving forward. And then founder and key employee perseverance is also incredibly important. Having the vision, having the willingness to run through a brick wall, like I mentioned before, to which our VP of Finance often also refers to. I'm going to give credit to Stefano for that statement if he's in the audience. But you have to have people that have a fair amount of intestinal fortitude in these areas. If you can develop a technology in parallel with your maybe big moonshot idea, but something that lets you get initial sales and revenue in parallel that might be relevant, like a test jig or a service or a component that helps just build the business and start having the mechanics of being a business and showing some early revenue growth before your really big idea that you're most excited about moving forward and is going to move the needle the most for the company. Having that early demonstration of revenue can be very, very helpful. And then thinking about sales cycle management. Canavi has capital equipment and it has disposables and it has service. If you can narrow down the sales cycle to one or two of those, so you're selling a piece of capital equipment or service or disposable use, sorry, it says single, it should say single use in this slide. That does simplify things. It's not necessary. Certainly Canavi is managing it and Profound is managing it and many other companies manage it all the time. But if you can simplify the process that, hey, I'm just selling you this one thing in this box, in this envelope, and you can use it and tell us if you like it or not. And then if you like it, you can buy another one next week. That's a lot easier than saying, hey, would you commit to this new thing that you've never bought before, put, you know, $100,000 or $1 million into it before you get your first hint as to whether or not it's useful or not. That's a challenging prospect for most healthcare systems to bite into. So you just have to think about how you're going to introduce a technology, and there's a little bit of go-to-market sort of strategy for Samir and others to think about. You can't get into this business without thinking of the government, because the government will fund your research and development to a large extent. It certainly provided a lot of stability to many medical device companies during COVID when we couldn't even cross the border to go to the US to sell product or demonstrate product. The government is the major procurer for most medical technology innovations in Canada. It helps develop talent and training programs. Regulatory matters are important, trade matters and export matters are important, and we've spoken about BDC. So there is, you know, for better or worse, a need to be familiar with government relations. Shahira, who was on our earlier session, part of her title was government relations, and someone on your team has to be interested and ready to share the pain points. The government wants to listen to those pain points. They want to respond. They want to support. And so having a bit of familiarity with that, I think, is helpful. I'm going to go through the last few minutes just with a few hopefully inspiring things. Success begets success. And so, you know, when we started Canavi in 2007, with our first employee in 2010, there were very few medical device companies around. 70 Surgical was started at around the same time. It got developed, was used in many patients, and got acquired by a company in the US called C-Spine. The people who developed the technology remain intimately involved and effectively partners in that larger entity now that now can sell in the US and elsewhere. They have local operations here in Canada. There's been retention of the talent, retention of the benefits, and improvement in care as a result of this transaction, as well as some liquidity for people that put money in early on. So a helpful exit for the founders and the people that supported that organization, while still having that ongoing benefits to Canada as well. Armin is one of my colleagues out of Waterloo who has an engineering background. His father was an orthopedic surgeon, and two of his other co-founders are pictured here. They've done 20,000 hip replacements with their technology that guides hip replacement with a digital imaging system. Most of those in the United States and Australia, very few in Canada. They've been very successful, and their last really big funding that I'm aware of was 5 years ago, and they've been able to sustain themselves with their existing investor base and their revenues, and been able to be selective about when they bring money on board since then. Perimeter Medical makes OCT imaging for breast cancer of a similar vintage to Canavi, getting started in the 2007, 2008. In fact, we had very common investor bases back then. It ended up going public in a bit of a reverse transaction. They're now well-funded and are making great progress. Another company called Molly Surgical. And then Baylis Medical certainly hit the headlines. Chris at the front and Frank next to him in the blue tie. They were initially a distribution business, and then they started bootstrapping their company with the revenues they got from distribution. And then they built a few of their own technologies for small niche markets, and then they sold off some of them at various points while they built a bigger business. And they built this theme, a strategic theme around left atrial access for cardiovascular procedures that were growing. And that's why Boston Scientific and several other companies competed to buy that portion of their business. And Frank and Chris, they're retaining the ownership of other new ideas for adjacent markets while Boston is buying their main revenue generator. And this will, I think, allow the operations here in Canada to continue. We'll get some big leverage from Boston Scientific's large sales and marketing force, and allow new ideas to have the capital needed locally to be developed. And several Medventions graduates eventually worked for Baylis at one point or another, or were involved in some of the important developments that led to this transaction and success, which I think is probably one of the biggest medtech successes in Canada in terms of international recognition. So some final remarks, and I'll answer a few residual questions. I'm sorry for going substantially over. But medical device development can be challenging, rewarding. For me, it's most satisfying when I get to see patients being treated. In the past year, I've gotten to travel and watch physicians and train physicians to use our device for imaging coronary arteries. And I love that. I love being able to talk with them and advance the field and be able to, give them something that they're excited about to bring to their patients to improve their care and move the company forward along with them. I think there are some areas in Canada that need to evolve. These 5 areas of how IP management is managed by institutions like hospitals and universities was really poor 15 years ago. It's a lot better than it was. There's still areas for improvement, but it's improved. I mentioned how Health Canada has improved locally to manage regulatory frameworks. Again, there's areas for improvement, but it's far better than it used to be. The talent pool is growing. We have increasingly more people in greater, more senior positions, but we need to continue to develop that because it's increasingly in high demand as this area grows. The 2 areas that we really haven't moved the needle on as much as I would hope for by now are domestic procurement by our local healthcare system and the availability of capital. I think we'll see some changes in at least 1 out of the 2 of those in the next year. And hopefully those remarks are helpful and interesting. A few questions that are out there. There's a question about if you engage an employee in a startup with the right non-disclosures and a patent. If the employee created the patent while they were an employee of you and your employment agreement states that anything that you paid for them to develop is yours, that's kind of that's the deal, right? When you employ someone to do research and development and part of their job description is to do research and development, that IP should be owned by the company and not by the employee. If an employee has pre-existing intellectual property, or if the intellectual property is developed that is entirely unrelated to the organization, that's where some gray areas come up, and I would just suggest getting some legal advice around some of those areas before making anything too definitive. But hopefully that provides an initial response to that question. Great. If there are any questions, love to open it up. Sorry for going over. We lost about 20 people in the past 20 minutes, but hopefully that's of interest, and happy to answer any questions.
Thanks so much, Brian, again, for such an insightful and very eye-opening presentation. We had originally planned the event to end at 7 o'clock, but I personally enjoyed the presentation, and I'm sure the audience found it extremely valuable, especially, given your very busy clinical schedule and other commitments to your research in Canavi. We truly appreciate the time you've taken to teach our students and community about the health innovation process and entrepreneurship ecosystem. I don't think we have any questions. If anyone has any question for Brian,
feel free to reach out as well. I'll put my email out here into the chat for anyone who's interested. Great to have so many people interested in the conversation, and we'll take it from there. Hopefully, just hope to see all of you at future events. Thank you.
Yeah, thank you, Brian. Just a couple of things. I have received multiple requests from different people asking if you can share the slides. If you can share the slides with me, I'll be happy to share them with the audience. Finally, a big shout out to our organizing team, including Dr. Joseph Fehrenbach and Atiya Manzoor from the Ideation Clinic for their great efforts and time in co-organizing and running and supporting these innovation sessions. A final reminder before we leave to our audience that our next session is taking place on Tuesday, January 18th. Our guest speakers next week include Drs. Joseph Fehrenbach, Ali Tavale, and Abu Bakr Khalifa, who will be talking to us about the process of clinical needs finding and understanding healthcare challenges and problems. Thank you again for joining us tonight, and we'll see you next week.
Take care, everyone.
Bye-bye.